F, F. Have. Hello. Okay. I think we started a little bit early. Okay, so hi everyone, thank you for joining me today for this session. There is a small delay in the streaming. I'm following the streaming in another window here. There is a small delay. This is normal in YouTube Live, so if you leave me any comment, I will only see it after about 30 seconds or 1 minute. So just keep this in mind. So thank you for joining me today. This is Abdullah Galal, and today I will talk about some insights into the GRIR account. So I will give some configuration tips. I will give you some hints on how to use the GRIR, how to analyze the different values in the GRIR, and also why this is important. And also I will do a demo on SAP S4HANA 1909. But before I start, so number one, this is a live video, so which means you can interact. So please interact with me, leave me your comments, your questions. I am following all the messages in the other window here, so just leave me your comments. Hi, good afternoon. Leave me your comments and I will try to reply to all the questions in time. The second thing is, I want to thank Marcel and everyone who is behind organizing this event. You guys have done a great effort in organizing different sessions, which is very useful to everyone. So thank you for this. And also I want to thank you for taking the initiative into donating and encouraging others to donate for the NGO that you are supporting. So this event supports an NGO that is helping the poor in Brazil. So if anyone is watching, if you think these guys are doing a great effort, then please support them, support the people by giving some donations. So this is always needed. And of course, with Corona, with COVID-19, the situation is much worse now. So you have a link here in the presentation. I will also leave it in the description of the video. So if you would like to participate, please go ahead. All right, so let's start. Let me move on to the topic directly. So we only have 1 hour. I will try to cover everything. I don't like going into the presentation a lot. I like more going into the system. So let me take you quickly through what I'm going to show you today. And then I will start with the SAP S4HANA. So why do I choose to talk about the goods receipt, invoice receipt account this much? Why is it very important? I'm not going to go into the details of the basics of GRIR and the meaning, because I already explained this in other videos. Let's move into some advanced parts. So why do I think it's very important? The reason is GRIR is an intermediary account. So this is an account that receives postings by the system automatically, not manually, which means it can easily go unnoticed. And this is, unfortunately, this is what happened to some of the customers I have been with. So GRIR account receives automatic posting from any purchasing process. This is number one. Number two is it has a lot of postings because it is included in any purchasing process. And usually we have a lot of purchasing happening. And after time, if you try to analyze the GRIR account, for example, if you get to the year end, and then you try to understand why you have a balance in the GRIR, it can be very complicated. Because you will have a lot of open purchase orders, a lot of points you don't understand. You will not remember what happened in every point. So it can get very, very challenging. So I always advise everyone to have a step in their period end closing activity to check the GRIR account and always try to clear and analyze the GRIR account and write off any unnecessary entries. Now, this can be very challenging, and let me tell you why. If we look in the normal purchasing process, so we have purchase order, then we do a goods receipt, then we do an invoice receipt. When we do a goods receipt, we post the GRIR, and when we do the invoice receipt, we clear the GRIR. Now, this process is very simple because the last step is the invoice receipt, which means the accountant can review the purchase order against the goods receipt, against the invoice receipt, before posting any invoice. And this is a very important control point. This is how we are sure we are not going to pay more than what we received. But in real life, it's not always this easy. Actually, most of the time, you will have invoice receipts before goods receipts. And also there are many other cases that can make this much more complicated, but let's look into this case. If you are a company that does importation, you import things from another country. In order to do importation, you need a letter of credit. And in order to apply for a letter of credit with a bank, you have to provide some papers. One of the documents you have to provide is the commercial invoice of the supplier, which means that you have to receive the invoice before you receive the products. So the accountant will have to post an invoice without reference to any goods receipt. You see what is the issue now? We already posted the invoice and we didn't receive anything. Now let's say that after 2 months, because the products take time to arrive, after 2 months, the stockkeeper in the warehouse received the products. It is not his responsibility, it's not his job to compare the good receipt against the invoice. It's not something he is interested in. The stockkeeper is only responsible for counting the items and receiving them in the warehouse. So we lost our control points. So let's say, for example, that we created a purchase order for 1,000 units. So we created also an invoice for 1,000 units. But the stockkeeper only received 990. For any reason, he only received 990. Now, there are 10 units missing. Who is going to see that these units are missing? Only the accountant that is going to analyze the GRIR. This is why it is very important to always keep an eye on this. Now, let's say no one is keeping an eye on this. We will have 10 units missing. These units can be stolen. Maybe the supplier didn't ship them. Maybe they were lost in the way. Maybe they were taken by the authorities. This is very important. So now the accountant has to go and analyze the GRIR, and then he can find that we invoiced 1,000 units, we received only 990, and then he can decide what to do with the 10 units that are missing. So the 10 units can be missing because the supplier didn't ship them. In this case, we will do a credit memo. We will pay less to the supplier. Maybe they were missing because they were taken by the authorities in my country. In this case, it is my responsibility, so I will write them off to an expense account, like price differences. Maybe they were lost in the way. In this case, we have to look into the Incoterms. So when the products are in the way, who is responsible for them? Is it the supplier? Then in this case, we post a credit memo. Or is it our responsibility? Then in this case, we also post it to an expense account. In order to do this analysis and to understand the GRIR account, SAP has provided many tools that makes it very easy for the accountant. Very, very easy. So the only thing is you have to keep in mind that you must maintain your GRIR account. Once you decide to do this, you can use different tools. Now, I will go into the system because I cannot interact with you like this. Let me go into the SAP S4HANA system and I will do a quick example, and then we can see the different tools available, and also we can see some configuration tips. Let me check the messages first. If you have any questions, please send me your questions. I'll try to answer as much as I can. There are no questions so far, so let's proceed to the system. Okay, so let me start by quickly creating a purchase order, then doing a goods receipt, invoice receipt, so we can see the financial entries. Then we can see how we can display all of this in the system. So to create a purchase order, we can go to ME21N. So the material number is, let me pick any material from this plant. So material number by plant Material class, material product system, supply cursor group, type, it should be here. Material by plant. Anyway, I remember there is one, this is RM12. Yeah, this one is okay. So this is a raw material. So I'm going to buy 1,000 pieces. The purchase organization 1710, purchasing group 001, company code is 1710 also. Okay. Enter supplier. So let's take this supplier. See a supplier in our company code 1710. So now I'm buying 1,000 units from this material, and this supplier, the plant is also 1710. And the price, let's say I'm going to buy it for 2 USD each. Now, before we do this, let me show you the material master data so we can see the costing of this material. So MM03. RM12. Accounting and costing views. Plant is 1710. So this item is a standard costing item. It's not moving average, so we will get a price difference. And the costing is for 1 USD. Now I'm going to buy it for 2 USD. So this way we can see the price difference. And I have a warning that the effective price is 2 while the material price is 1. So we are buying it for much more than it is real value, which is okay for me. Check. No messages and save. So now this is the PO number. Copy. Now let's say this is an importation process. So we are going to post the invoice receipt before the goods receipt. So let's go into /n, MIRO, invoice receipt. Company code 1710. Until now, we have no financial entries because the purchase order has no financial impact. So this is the date today, 2020. The reference is mandatory. Reference is the invoice number of the external vendor, because now I'm recording as an invoice that I received from an external vendor, and this invoice has a number on it. So usually we enter this number here. So this can be EX-1234, anything. And enter the purchase order number here. And now, as you see, I have these empty. Why are they empty? Because we did not receive any products. So the accountant has to fill them manually. So now we received, let's say that I'm going to invoice the 1,000 units. So this is the amount, this is the quantity. So 1,000 pieces, and the amount is 2,000, same as the PO. Okay, so the amount total is 2,000. Of course, you can enter the taxes and so on, but this is not related to our video now, so I will pass and post. We still have messages. Let's check. Reversal quantity greater than 10. This is reversal. I am getting this message because I'm trying to create a credit memo, not an invoice. So let me cancel and switch to invoice. So the amount is 2,000, quantity is 1,000. Save. So now I'm posting the invoice receipt. Then let's look into the GL entry. Again, if you have any questions, just leave the questions in the comments and I will try to answer them. So to display the financial entry, display follow-on documents, accounting document, and this is our financial entry for the invoice. So we don't have a purchase price variance now yet. Why? Because we did not post a goods receipt yet. Until now, it's only an invoice receipt. So the supplier, we owe him 2,000. And against this, it is in GRIR account. So we have a credit to the supplier, debit to GRIR. Now let's take a look into the line items of this account. So this is the first tool that SAP is making available to analyze the GRIR. The first tool is the GL line item display. So in SAP S4HANA, this is FBL3H and enter. This is the GL account number. We lost it. So this is the GL account number, and I'm only displaying the open items. And this is the key date, so this will show me all the open items as of today. And execute. So this is a very useful report to analyze any GL account, not just the GRIR, but for GRIR you can also make other fields available, like the purchase order, the purchasing document, and the quantity and the material code. So let me show you what I mean exactly. So for 2020 here, I am going to open. For period number 5, I have 2,000 posted as invoice receipt, RE. And this is our purchasing document number, and this is the material we are buying, and this is the quantity. So this is a very easy analysis. So you can easily find why we have line items in GRIR. So this is the PO number, the material, the quantity, the value, everything. This is a layout that I created for this demo. It will not be available in your system. To generate this layout, you can go here and you can choose the columns you want. So for me, I am displaying the purchasing document, the quantity, unit of measure, and the material. These are related to GRIR. Okay. So now we in period 5 in 2020, we have an open line item of 2,000, and this is an invoice receipt. You can know that it is an invoice receipt from the document type. RE is the document type for invoice receipt. This is something you will get to know by heart after you use the system for a while. Now let's go to the second step. I'm going to post the goods receipt. So let's go back and open a new window, /O. Goods receipt is transaction MIGO. So now I'm going to post a goods receipt. So first of all, you have to choose here what you are doing. So this is a goods receipt based on a purchase order. And then I have to enter the purchase order number here. So I will switch the screen and copy this one. Switch back. And this is our PO number. Okay. Let me close this. Okay, and this is our PO. We have 1,000 units, so we can receive 1,000 units now. I will receive only 990. Then click on OK. Check. So what I'm doing now is I invoiced 1,000 units, and I'm only receiving 990. So the stockkeeper can get a warning that there is a deficit from the PO, 10 pieces. There are 10 pieces missing. But as a stockkeeper, I'm only responsible to count what I receive. It's not my responsibility to check against the invoice. So I'll just click on OK and post. So this is our material document number. You can easily display it by going here, display, and enter. Document information, financial documents. You have an accounting document, a controlling, and a material ledger. Accounting document. This is our financial entry. So we have inventory, raw material, debit with the standard cost. So we received 990 units, multiplied by 1. This is 990 USD. We have a GRIR credit by 1980, and we have a price difference. Why do we have a credit to the GRIR of 109,080? This is a very important point, so please pay attention to this part. Now, the GRIR account is quantity based. So which means whether an item is open or closed, it doesn't depend on the amount. It's not the money, it is the quantity. So now the GRIR is open by 10 units because we invoiced 1,000, we received 990. So there are 10 units that are still open. These 10 units multiplied by the invoicing value, which was 2 USD, equals 20. So we have a credit to the GRIR of 1,980. So now we have a remaining of 10 pieces for 20 USD that will remain open in the GRIR. Let me show you this in the line item display. So this is our report again. You can easily refresh. This is one of the reports, one of the few reports in SAP that you can refresh without going outside. All you have to do is go to list and refresh. Now, as you see here, I have a balance of 20 only. So let's open this. So for period number 5, I have an invoice receipt, RE, for 2,000. And I have a goods receipt, WE, for 1,980. So I have a remaining balance of 20. If I open this line and this, you can see the purchase order number, you can see the quantities, you can see the material. It is very easy now to understand why we have the value. Imagine you are doing this after 1 year. It will be very hard to understand. So this is why it is important to always keep an eye on the GRIR account. Now we have 10 missing pieces. So the accountant has to decide what to do with them. Before I go into this, let's see if we have any questions. I am facing the following challenge. This looks like a very long case, Vincenzo, so let me leave it until the end if we have time. It's not a simple question. I have to go through the details. Okay, so let's see if we have time at the end of the session. I will see if I can answer it. But for now, let's proceed with the basic, simple explanation, okay? I'm not going to make the things very complicated now. So I have 10 units remaining in my GRIR. And now I have to decide what to do with them. So let's say that we have 5 units that were not shipped by the supplier at all. The supplier did a mistake. He did not ship 5 units. And then we sent him an email and he replied saying, yes, there are 5 units that I didn't send. So please create a credit memo for 5 units because you are not going to pay for them. So this is the first case. The second case is the other 5 units are our responsibility. They were taken by the authorities in the port to check for health standards. So we have to write them off to our P&L accounts. So let's start with the first case. How can I create a credit memo in order to reduce the value of the liabilities to the supplier and also to reduce the value of the GRIR? So we do this through also the same transaction as the invoice, which is MIRO, M-I-R-O. So let's open a new window, /O, M-I-R-O. And the date is 18/05/2020 again. Reference, it's mandatory. And instead of invoice, I'm going to select credit memo. There are 2 different things also, subsequent debit and subsequent credit. They are not related to the video, but just be sure to choose credit memo, okay? So credit memo, and I'm going to enter the purchase order number here, enter. So SAP automatically is showing me that I already invoiced 1,000 pieces for 2,000 USD. And I can say that I want to create a credit memo for 5 pieces for 10 USD. So this will be my credit memo. And the total value is 10. So I have to insert 10 here. And then I'm going to post. So now I posted a credit memo. Let's go and have a look into our GRIR account. So refresh. Now, as you see, I only have 5 pieces remaining because I have received 990 and I invoiced only 995. If you open here, you will find 2 documents, 1000 minus 5. So now I have created a credit memo for 5 pieces. I'm not going to pay for them. They are not an expense for me. The supplier will pay for them. And then I want to write off the other 5 pieces. So this is a different tool supplied by SAP. So let's go back. Now, how can I write off 5 pieces from my GRIR? And this is something that's used a lot in different companies. So whenever you have some units missing because of the health authorities, for example, if you are working in the food industry, then all of the time you will have this case, because whenever you import anything, some of it will be taken in by the authorities to do the health check. So you have to write off this amount. You cannot just leave the purchase order open and leave your GRIR open, because if you do this, at the end of the year, you will find that you have an open amount that you have to write off in one period instead of writing it off in the correct period. So for example, in April, you have some in May, in March, in June, in July. If you leave all of this until the end of the year, you will post all of them in December, which is wrong. So you always have to keep an eye on GRIR, and if you know that there are any purchase orders that should be closed, then you should write off the remaining quantity. So how can we do this? Let's go back to the SAP menu. So you can find this transaction under logistics, logistic execution, and no, not logistic execution. You will find it under material management, logistics invoice verification, GRIR account maintenance, maintain MR11, maintain GRIR clearing account. Open. So this is my company code. I have the vendor here. You can choose any filtration criteria you want. I will just insert my plant, and I will change the period because this doesn't include my PO. So I will make it until August, for example. And I'm going to execute. So these are all the open GRIR items that I have. This doesn't mean that they all have an issue. Maybe some of them are actually legit. Maybe some of them we actually received the products but we didn't record the invoice, or we received the invoice but we didn't receive the products, which is a normal case. But also you have some cases with very small amount of pieces, so like 2 pieces, 3 pieces. Then you know that something is wrong in this PO. You know that this PO should be written off. So I can actually sort with the difference quantity. This is the difference between the PO and between the goods receipt and the invoice receipt. And these are the differences we have. So there is a PO that we have 4 pieces. So you have to check, the accountant has to check and decide what to do with every PO. For me, I'm going to filter only on my purchase order for now. So I went back and I'm going to enter the PO number here and execute. Okay, execute. No data selected. We have to check whether it is a delivery surplus or invoice surplus, which means is the delivery more than the invoice or the invoice more than the delivery. In our case, it is an invoice surplus because the invoice is more than delivery. So I have to check this and execute. So enter the PO number again, execute. So this is our PO. Now we have a difference quantity of 5 pieces for 10 USD. And I can decide to write it off by clicking here and clicking on post. So this is very simple, as you see. Just once you make the decision that you have to write off a certain quantity from the GRIR, you just go to this screen, you can select, You can display the purchase order before you do anything, so I can click and display the PO. From the purchase order, I can display all the related information like the invoicing, the goods receipt. So this helps me making a very good decision on whether I should write it off or not. So now I am here, I can see that we have an invoice receipt, we have the goods receipt, we have the invoice receipt, we have a credit memo. I can see all the details. Now if I decide that I'm going to write off this quantity, then I will go back and click on post. And this is it. So document number created. Now let's go back to our line item display and see the impact. So refresh. Now as you see, it is 0. I have no open items. So if I open here, you see that we have 3 document types. This is the invoice, this is the goods receipt, this is the write-off, 10 pieces, 2010 and 1980, and you can see all the details. Now as you see, until now, I still see this as an open item in my report. If you remember, when I am displaying the line items from outside here, from the selection screen, I choose that I only want to see the open items. Why? Because as an accountant, I only want to see the open items that can have an issue, the things that I want to analyze. But even though the numbers are equal to 0, so the debits and the credits are equal, SAP is not going to clear it automatically. You have to run a program to do the clearing. So let's open again and see what I mean. So now I'm displaying only open items, and although I'm displaying only open items, I can see these 3 items here. Although actually now they shouldn't be here. They should be already cleared because they are cleared. I don't want to take any other decisions related to this PO. This PO is over. So how can I tell SAP to clear, to remove these items from the open items? I have to run the clearing program. When I run the clearing program, SAP will check all the purchase orders that have debits and the credits equal to each other and will automatically clear them. And then it will make it easy for me to understand what items I have open in the future. Instead of having all the items, the closed ones and the cleared ones, and having to go through all of them, I will only have the open items that actually require attention. Now, before I go to the automatic clearing program, let's see if we have other questions. You advance 90% of payment, and when the invoice arrives, so you have to match the account payable to calculate the remaining amount to be paid. So regarding the question from Sai, yes, this is the same GRIR process available in ECC 6. For Marcel, no, this is not a down payment, because down payment means that we paid, and all the process I did now, I didn't pay anything. I only recorded the invoice. Actually, normally, you will pay after you receive the products. So this is how importation works. So usually you will open the letter of credit, which guarantees to the supplier that he is going to get his money. So now he is guaranteed, he is happy. So he will send you the products. But in order to open the letter of credit, the bank usually asks for the commercial invoice, because this is the document that proves the amount that you have to pay to the supplier. So you have to get the invoice from the supplier before you actually receive the products. So you get the invoice, you record it, you send it to the bank, you open a letter of credit, the supplier receives a confirmation of the letter of credit, he ships the products. After we receive the products, we will pay the invoice. So this is not a down payment. A down payment means that we paid before we receive the invoice. This is different. So let's go into the automatic clearing program. So the automatic clearing, you can find it in accounting, financial accounting, general ledger, periodic processing, automatic clearing without specification. When you run this program is not only used for GRIR, it can be used to clear any GL account. But if you are going to use it to GRIR, you have to check this checkbox. This is because the GRIR is a special account. It has link to the purchasing document. So SAP will include the purchasing document as a criteria for clearing when running the program. So it is very important to check this, and then also select GL accounts and put the GRIR account number. So let me get it from the other screens. So this is the GRIR account. Paste. And you can choose to have this as a test run or a production run. Test run means that I'm only going to watch, it's not going to do anything. If I remove this, then it will actually update the database. So let's run a test run first and execute. Posting period is not open. So let's see what's going on here. Okay. I did not choose a company code. This is why I'm getting this error. So I have to 1710 to insert my company code here and execute. So this is the GRIR clearing. Now let's execute this as an actual run to see the impact in our line item display. So here, remove test run. I will also enter the year 2020 and execute. So this is a warning that this is a production run. You have to hit enter to pass. And this is the clearing. So SAP automatically detected the items related to our purchasing document and cleared all of them together. Now let's go into the line item display and see the impact. So /n FBL3H GL account. Now I'm also going to display the open items. Execute. Let's see what is wrong here. Exit. Is this is not. This is the GRIR. Okay. So as you see now, I have no items in 2020. Why? Because these are items that have been cleared by the automatic clearing program. So now I have an easier screen to analyze the numbers. Now I can only see the lines that actually require attention. I don't have to go through other lines that are cleared. Why I am explaining this part twice? Because many people ask, what is the importance of clearing? Clearing has no impact on financial entries at all. Clearing is only a technical step that will clean up the reports. So when you run the clearing, SAP automatically removes any line items that are cleared. So now you have more visibility on the lines that require attention. This is why clearing is important. Some people actually never run clearing, and this is okay. So clearing is not a mandatory step. It is only a technical step. It has no financial impact. Now this is it for the clearing. The last tool that I want to mention is related to the financial standards. So according to the financial standards, when you get to the period end, you have to separate the GRIR account into two separate accounts. One of them is the goods receipt and not invoiced. The other is the goods invoiced and not received. And this can be done automatically in SAP. So there is a program that will go and check the GRIR account and check any open items and either post it into received not invoiced or invoiced not received without having any impact on your GRIR account. This is only an adjustment entry that happens at the last day of the month in order to get a snapshot that is correct in the financial standards, in the financial statements, but it's not something permanent. It doesn't impact your GRIR. And also it's not mandatory. So let's go into the GRIR classification. But before I do this, let's see if we have any questions. I suppose that the difference will stay in GRIR and you need to verify this account and if you finished your service or not. Yeah, this is true. So you have to analyze the GRIR and usually you will have some kind of documentation proving what happened to the missing units. So let's say that the units were taken by the authorities. They usually give you a paper proving that they took these units. Otherwise, people will just steal the stock in the way. So you have to look for documents that this has been taken by the authorities. Or if it was missing from the supplier, usually you send an email to the supplier and the supplier responds whether they forgot to send you some units or not. So yes, you have to go and analyze the GRIR, and then you have to decide for every unit whether it is to be written off or not yet. Maybe the missing units will be sent with the next PO from the supplier. So in this case, I'm not going to write it off. So this is a decision that has to be taken by the accountant, but usually you have lines that needs to be written off. And the meaning by write off the line is you are going to post it to your P&L, which is a periodic posting, which has to happen in the same period it belongs to. This is why it is important to analyze GRIR in every period. So my question is that the user created one PO with 2 line items and posted goods receipt on 23rd, and now in May month the user wanted to reverse the GR. This is how the system will post this transaction. Say also, let me get to your questions after we are done, because this is a business case. It's not a question in the explanation. So after I'm done, if we still have time, I will go through these questions, of course. What is the difference? So should we wait to, do we need to maintain any additional clearing rules? For automatic clearing of GRIR, it is automatically configured by standard system. Once you check that this is a GRIR specific clearing, SAP will automatically do this. I didn't configure anything manually. This is the standard SAP best practice. Should we wait to pay the invoice before or after the clearing? This is not related to the process at all. This is related to the business process in every company. So there is nothing in SAP that will prevent you from paying before or after, because paying is not related to GRIR. Paying is related to the supplier invoice. It's to the supplier side. It will be debit to the supplier and credit to the bank, for example. So it has no impact on GRIR. So it's not related to this process at all. So payment can be before the GRIR, it can be after. It's not related. It can be any time depending on the business process of the company. What is the difference between the values of the costing of the product and the value that you entered in PO 1 USD? So the different values we have the standard cost. The standard cost is my plan of the cost of the product. I already created a full playlist to explain how to do the standard costs. So you can check it on the YouTube channel. But my standard cost is something that represents my plan of the cost of the item. And in my case, this is 1 USD. The other value in the purchase order, this is the price. This is my agreement with the supplier on what I will pay. So when I asked the supplier for some units, he said the price will be 2 USD. So this is not related to my cost. My cost is my own estimation of the product. The price in the PO is the supplier price. And these are, the last value you can enter is the value of the invoice, which can be different from the purchase order, but I didn't do this in my case. So I'm not sure what you mean by $5, because it was all 1 and 2. When we choose to write off the units taken by the health authorities, is there somewhere that we can maintain the explanation of the write-off? Okay, so this account, the account that we have in that we use for write-off, this is a very special account. It's only used for the write-offs. This is what I did in my case. So this account, anything that's written off to this account, we know that it's written off for this reason. But let's see, I'm not sure if there is a way to insert some details in the screen, but we can check. So this is the screen, maintain GRIR clearing. And I don't see anywhere here where I can mention I don't see anywhere where I can mention the reason of why I did the write-off. Maybe you can insert something in the reference and document header text. But this means that you will only write off the items related to health authorities, and then you redo the program again for the other items. This can be a solution. Or after you are done with the maintenance, you can go to the line item display of the account that we written off to. So this you can display actually, if I want to display the write-off, I can display it from here. So follow on documents, accounting document. So this is the account that we have written off the GRIR account to. So my advice is you can go and you can either change the document, so you can change this document like this, and you can insert a document header text, so health problems, for example, or you can go to the line items of the GL and do mass edit of all the lines. This is just from the top of my mind for on what you can do in order to save the reason of why you did the write-off, which is a very valid and a very important question, because usually you will get audit questions about this. Why did you write off this amount? So yes, you can go to the document, go to change mode, go to header, and you can insert any notes you want here. Thank you for this question. This is a very good one. And this is it. Okay, let's go into the GRIR classification program. So again, this program will separate your GRIR into goods invoiced, not received, and goods received, not invoiced. This is something required by the financial standards. So I also want to show you some configuration tips. So I will do this part quickly before we go into configuration. So you can find this in accounting. So let's go back to accounting, financial accounting, general ledger, periodic processing, closing, reclassify, GRIR clearing. So this is a program that will separate our GRIR account into two different accounts. The company code is 1710. GRIR clearing key date is, so let's say the key date is today, 18/05, or no, let's keep it the end of the month. Usually this will be the end of the month, so let's keep it at 31/05/2020, enter. And then you have to go to postings. If I run the program like this, nothing will happen. So I have to go to postings and click on create posting. If I didn't click on create posting, it is like a test run. SAP will just show me the values, but it will not post anything. So let's do this as a test run first. So all I did is I inserted the GRIR number and the company code and the key date, which is the last day of the month, and execute. And this looks a little bit complicated, but trust me, it is very easy. All you have to do is go to the end of the page and click on this. Now it's much easier, yes? So you have BNG and GNB. You have goods received, not invoiced. You have goods invoiced, not received. If you want to see the details, you just click here and it will show you the different details. Now, one thing is to see the financial postings. This is only a report. To see the postings that will be posted if we ask SAP to post, you go here, and these are the financial entries. So now, very important note on this financial entry. Number one, this is going to debit this account and credit this. So this will debit the GRIR, but as you see, it is not going to debit the original GRIR account. It is going to debit another GRIR adjustment account. Why? Because no one can touch the GRIR except if it is a posting coming through a purchase order through the MM module. This is only an adjustment financial entry for period end, so no one can post to the GRIR. So instead, we have to post to an adjustment entry, so this way we keep our GRIR clean. Now let me show you what is the name of this account. Control C. And let's go to FS00. So this is a GRIR adjustment. So this is a manual account. Anyone can post to it manually. It is not related to MM. But in the financial statements, if I go to edit financial statement version, I want to give you the overall picture of this. So if I go to the financial statement version to my balance sheet and click here, this account is mapped in the same place under trade payables, in the same place with the GRIR. So this is our GRIR, and this is our GRIR adjustment account. So from the financial statement point of view, it is exactly as if I changed the value of GRIR, because in the financial statement, you will see the trade payables. But from the system point of view, we didn't touch the GRIR, which is a very good thing, because GRIR is like a very important account. No one can touch it except if it is something related to the purchase order. So this way, we avoid mistakes. So this is the first line of the posting, and the second line is this. This is either a goods received not invoiced or goods invoiced not received. So let's also look into this account /OFS00. We have the maximum screens. Let's close this one /N FS00. So this is goods received, goods and services received not yet invoiced. So in this case, these are liability, because we received the products but we didn't pay for them. So these are a liability. So we debit the GRIR and we credit this account. So we debit the GRIR adjustment and we credit the goods received not invoiced. You can also, these are GNB, so these are goods received not invoiced. The other one is BNG, which is goods invoiced not received. So this will be another entry. It will be debit to GRIR adjustment, and this is a credit to goods invoiced not received. If we can check this account, so these are goods and services not yet delivered, invoiced, not yet delivered. So this is the GRIR reclassification. So SAP automatically takes the accounts and separate them into two different accounts. The other thing is SAP will automatically reverse this entry in the first day of the next month. So this is not something, because this is an adjustment entry. It is only there to do a snapshot for the financial statement. After this, we have to reverse it. So if you check the posting, you have the document date, you have the posting date, and you have the reversal posting date. So when I post now, SAP is actually going to post two financial entries. One of them is the original one, the other is the reversal. Both of them will be posted today, but the posting date will be, the original one will be posted with the posting date at the end of the month. The reversal will be posted in the next month, so it will not impact my financial statements for this month. I hope this is easy to understand. We are running out of time and I didn't get a chance to show you the configuration. So let me show you at least how we configure these accounts, the goods received not invoiced and goods invoiced not received. So if I go to SPRO, we are done. Okay, /N SPRO. So this is the configuration. If I go to financial accounting, general ledger, I hope I'm going right here, periodic processing, closing, not here. So reclassification, here it is. Define adjustment account for GRIR clearing. So if you click here, so you have invoiced but not delivered, BNG, and delivered but not invoiced, GNB. If you open this, you will have, this is the reconciliation. So this is the original GRIR account, this is the adjustment account, and this is the target account. So you have the same for both sides, GNB and BNG. So this is how we configure the automatic accounts for the reclassification of the GRIR that you can post to from in the program. Now this is for the automatic determination of the reclassification accounts. Let's see if we have any questions quickly. So should we wait to pay the invoice? No, this is done. What is the difference between the values? Done. Great, thanks. Okay, we have no more questions. So let's proceed with another configuration tab. Now, how do we configure the GRIR account determination? This is something that most of the people who work in financial accounting know, because this is a very important part. So in order to configure the GRIR account, you have to go into the material management menu here. Material management, inventory management and physical inventory. And then we go to somewhere here. Plan, go to see automatic movements, physical movement type. It's not here. Sorry, valuation and account assignment and account determination. So account determination can be with wizard or without. Let me go into the final step, configure automatic postings. So this is OBYC. Most of us know the transaction. Account assignment. The transaction key for GRIR is WRX. So this is how we configure our GRIR account. I'm sorry I didn't have time to go through all the details, but in order to explain the account determination for MM, this will need a whole different session. So what I wanted to mention is the GRIR account, you can have one account for all the company, or you can have one account for every valuation class. So sometimes we get a question, what if I want different GRIR account depending on the material code? In this case, you can create different valuation classes. And when you configure the account determination here, you can go into rules and then say valuation class. Let me copy the GRIR account number first. So in my case now, I have only one GRIR account for all the materials in my plant. If I want to have different GRIR account based on the valuation class, and the valuation class is assigned to the material, so I can have different GRIR account for different materials, then you can go to rules and select valuation class here, save, yes, request, okay, go back, and now you can maintain a different account for every valuation class. So this is how you can have different GRIR accounts. The other question is, sometimes we want different GRIR accounts based on the purchasing document type. This is a very advanced part, and this one requires enhancement. It requires a user exit. So number one is you will have to go to rules here and enable general modification. This means that we can insert a key here that SAP will somehow link to the purchasing document type and determine the GL account for the GRIR. And this requires a user exit. It's a user exit, so it is allowed by SAP, but you have to get the help of an ABAPer to do this. This is the last thing I wanted to mention. Thank you, Manuel. Thank you guys for being here today. We are almost out of time. We only have 2 days. For Sai, you have asked some questions that I didn't have time to answer. So I will check after the session and I will reply to your comment. And if I need more details, then please reply also with the details that I ask you for. Thank you guys for being here today. It has been my pleasure to provide this session. I hope it was useful to everyone. If you have more questions about GRIR, I already created another video explaining the basics of GRIR with an example, with a very nice presentation. You can go through it. You will find it in my YouTube channel. If you want to understand things about how the standard costing works and the purchase price variance, I also created another playlist for this, so you can also go ahead and check this. And if you have any questions after the session, leave a comment. I will reply to all the comments as much as I can. Thank you for being here with us today. You are welcome, Rohit. You are welcome, all of you. It makes me very happy to see that you guys are following. So thank you for being here. Thank you for watching. And let me know if you have any questions. Thank you. So I will end the streaming for now. Thank you, Marcel, for your help with organizing this stream. Have a good day, everyone. Thank you.